Yeah, so my name is Brian Wang. I'm an investor and also an analyst in various deep tech, and I write Nextbigfuture, over 30,000 articles on all kinds of deep tech, including perhaps 1,000 on quantum computing. So the structure of this panel will be that we'll have the panelists introduce themselves, and then we'll go into discussion of the non-quantum computing aspects of investment, like quantum sensing and those kinds of other non-quantum computing investment areas. And then we'll discuss the near-term quantum computing investments, and then transition over into how the investors view risk and opportunities, which startups that they're looking at, and those aspects of how they view the quantum startups. And then we'll have some closing remarks, and then we'll have Q&A. So first we'll have some introductions. So we'll start first with Nardo to introduce himself and his company.
Yeah, sure. Nardo Manaloto. I'm the managing partner for Qubits Ventures. Qubits Ventures is a venture firm investing in early stage, pre-seed, seed level quantum and photonics companies. When I say quantum, technology is not just computing. A lot of people conflate technology equals computing, computing equals technology. So more in the broader scope of technology. So anywhere from applications to system software to components and devices and sensors, and even to and anything else in the transitional or hybrid type scenario.
And next we have Eric from Entrada.
Yeah, Eric Hall, managing partner at Entrada Ventures. We're based here in Silicon Valley and also in Santa Barbara. We're a seed stage fund, like to be the first institutional capital lead rounds, right? $1 to $2 million checks into companies across a range of technologies. We have a deep tech section. We have some SaaS software, but really like to partner at early stage with promising technology companies.
Alexandra.
My name is Alexandra Beckstein. I run a company. It's called Kai Ventures. We are based in Basel in Switzerland, and we position ourselves as an ecosystem builder in the quantum space. That means our aim is to build up an ecosystem with all the players it needs to build the technology. And for this, we have two instruments. One is a 50 million fund. We invest into pre-seed up to Series A startups, up to 2 million. And we run an accelerator. And the accelerator is for us, first, it's a risk mitigation instrument for the investments, because we develop the startups also in their business cases. And second, it's for us, it's the real instrument of ecosystem building, because we want the startups after we invested, we want to have them on site, we want to work with them, we want to bring them corporate partnerships and also partnerships amongst each other.
And we have Taylor.
My name is Taylor Sargent. I'm the technology principal at Airbus Ventures. Airbus Ventures is actually a multi-LP financial fund.
Can you use the microphone?
I'll use this. Oh, are we good? Can you hear me? Yeah, okay, good. So my name is Taylor Sargent. I'm the technology principal at Airbus Ventures. Airbus Ventures is a multi-LP financial fund, not a strategic investor of Airbus. We do have external capital from the Development Bank of Japan, from the Mitsubishi HC Capital, and from some other US-based funds as well. We are early stage deep tech investors, so we invest first check into seed to Series B companies across aerospace, quantum technologies, computing, decarbonization, materials, and other related fields. And we do have a global presence. So the headquarters is just down the road here in Menlo Park, but we also have offices in Toulouse and Tokyo. We also have members of our team based in LA. I'm based in Denver. We have Washington, D.C., Paris, and Munich.
Okay, so why don't we start with Taylor to discuss his view and this fund's view on the non-quantum computing areas, the quantum sensing. How do you see those near-term opportunities developing? What's most interesting for you in the non-quantum computing areas?
Yeah, so if a lot of you have heard the earlier presentation and some of the other presentations throughout the day, there are a lot of technologies that we are excited to look at that kind of can lay the foundation of quantum computing eventually, but are also able to stand on their own and solve important real-world problems, as mentioned earlier with Q-control, that's working on a pretty important element of kind of error correction in both quantum computing and quantum sensing applications to help kind of push those industries forward. We also have QNect, which is building a suite of products that can help with entanglement distribution for ultra-secure quantum communications. Eventually, that may also lend itself well to distributed computing. But on these roadmaps, there are only every other word that I say is important. So have the other one. Yeah. Apologies. No. Is this working okay? Not yet. Oh, there we go. It's louder, definitely. So we definitely see some technologies that are starting to see a real quantum advantage that are still technologically very challenging, but not quite at the level of a fully fault-tolerant quantum computer. So those are some of the elements that we're excited about.
Okay. Alexandra, what's your view on that?
So in general, if there is startups out there in the audience, I don't see so well, but so in general, we invest in all the quantum technologies that are out there in communication, sensing, and computing. But what we see, of course, is the most of the money is going into quantum computing, right? But I guess we, as an investor, we also look at technologies that are already commercialized, and surely quantum sensing is one of the very easy approachable quantum technologies we also invest in. And we have a lot of good startups and applications in medtech, also in gravimetry, different technologies we invest in. And yeah, I guess quantum sensing is one of the technologies, and also QKD. It's a technology that is very much developed because it has it's military relevant or security relevant, whatever you want to call it. And there is also made a lot of developments in the last time.
Okay. Eric, your perspective?
So again, we're not a quantum-focused fund. We look at a diverse set of technologies. We have one investment in quantum, looking at a couple others. But in general, and maybe the other background here, my background's in PhD in material science and lasers. I love sensors. I love a lot of these aspects. And so we're certainly looking at a lot of those. But I think the one thing to note, for a fund like ours, looking at an early check, there's so many risks down the line. That reward has to be huge. And that reward with a computing company, there's kind of no argument there. There's a big, you can have a big outcome there. With the sensing company, I'm not saying you can't have the big outcome, but that is another factor that we have to look at more carefully. That is something that has to be justified for these other applications, whereas computing, it's kind of already given.
Okay. Nardo?
Yeah, so to me, if I invest a lot in integrated quantum photonics. And the reason I do that, because photonics plays a really good support role towards quantum computing, quantum sensors, and all of that, right? So, but these technologies, initially may start off in the photonics realm, but actually works its way up into quantum, right? A good example is a portfolio company of mine that's basically building a room temperature quantum computing in the photonic space. And their first product is interesting. It's a dual photon detector, right? So photonics. But the second product is an integrated quantum photonic chip, right? And then eventually a quantum computer. So I'm interested in those because there's a short-term, mid-term, and long-term approach towards the investment. It's not that I'm interested in quantum computer. As you can see, that first investment is a quantum computer. But I would like to learn the roadmap of each of these companies to determine if there is a short-term, mid-term, and long-term approach to their roadmap.
Okay. And that's a good transition over to then the near-term quantum computing aspects. So what's your view on that, especially with the photonics, and what's your perspective on timing and those other aspects of it?
Well, I would say from a perspective of pure quantum computing in terms of applications and things like that, it'll be a while, right? So where we're at is definitely on more of the hybrid scale, right? So if you're looking at building the quantum tech stack, you're looking at foundational things and then middleware aspect of things. So you're really building the stack first, right? So a lot of the investment will normally happen at the very beginning on those, right? So why quantum computing companies are very interesting is because they're building the entire stack, right? So in terms of where I see the short term is really in the hybrid. Anything that can connect classical and quantum together, we're going to be living in a hybrid world. It's not just going to be classical versus quantum versus this versus that, right? So anything that can bridge all of that, interconnects, distributed quantum computing approaches, I would look into those.
I think for us, I mean, one thing to note near term for a seed stage fund is can be pretty far out, right? And but we on the spectrum, I think we're pretty bullish in terms of the timeline for computing and some of the advantages there. And so we're particularly interested in things that. So our first investment was in Kipu Quantum, whose main premise is that they can bring forward the horizon of when practical quantum computing can be brought to industry. And so that is kind of where we're starting to see opportunities and starting to get excited about things that would bring in that threshold, bring in when actual problems are going to be solved. Maybe there's some debate over how exactly, this is maybe not something, this is something still a classical system could do, but you're doing it on a quantum computer because you're getting actual value. And that's what we're excited about in the near term.
Yeah, I think one approach, what we see now a lot is what Nardo just mentioned. It's coming from, or what you just mentioned, it's from coming both sides, right? The hardware approach and the algorithm approach. Like we say always, we are in the second wave of investing. Like the hardware investments are already done. Now it comes the algorithm investments, and the aim of the algorithms is also, like for example, your investment in Kipu is to use the hardware how we have it now, how it is today with better algorithms. So I also saw in a talk before that someone said we don't talk anymore about the NISQ era here this year. We talked a lot about the NISQ era the year before. Now we talk a lot more about error mitigation and error correction. This is also a field where we would potentially invest. And what I'm also interested here, actually, I'm here to exchange about this, is the influence of AI into the development of quantum and also quantum algorithms. This will be a major step that will, maybe next year we'll have a panel only on this. I think there will be, there is a huge development majors right now.
Okay. Taylor, your perspective?
Yeah, I agree with a lot of what my fellow panelists have said. So to not repeat, I'll say that I'm also interested in the educational element that is pretty important, especially considering there aren't that many quantum computing, quantum sensing, quantum insert fill in the blank professionals throughout the world. And so these approaches that allow these professionals to kind of port their skills over from traditional algorithm development on the classical computing side into the quantum computing industry are going to be phenomenally important.
We'll start with Eric in the aspect of risk and opportunity. Like when you meet a startup, an entrepreneur, how do you look at, you talked about the sizing of the opportunity.
Yeah, I mean, for us, that's where you have to really start, is the size of the opportunity, right? Because there are so many risks along the way. And for a fund like ours, you really need that return from that company to be pretty exceptional, right? From where we're coming in, we've been the first check, companies partially an idea, partially proven out at that point. And from there, then you kind of start looking at the whole package of potential risks, right? Team risk is huge, so you kind of have to understand, is this the right team? Because the path we have laid out now is not going to be the ultimate path, right? There's going to be dances along the way, and is this the team to find that path? There's market risk, there's everything, and we kind of have to go through all that, but it really all starts with the opportunity.
Alexandra, you want to talk about that or of the ecosystem thing?
The first thing is always you have to have a look at the science. But I think today we pretty much know if this is a good product or good solution, what the startup is developing. I think we are at that point today to be able to evaluate that. And then, of course, we also look at the journey of the startup, who will invest after us. And it was also mentioned before, so it's easily to find maybe an investor after you when it's about quantum computing, but the market for quantum sensing, for example, it's much smaller, and it might be much more difficult to find an investor after you. In Europe, we also have a big challenge with the later stage funds, so we hardly have any deep tech growth funds. Now they are popping up a bit. One topic we're also looking at very closely is the team. That's always said, and it's really true. And we, especially at Kai Ventures, we have a look if we can help the startups to scale, if we really have an added value to bring to the startups. We, for example, would not invest in any startup that has a beautiful team, a beautiful use case, if it's somewhere and we would never meet it. We really want to bring this smart part of the smart money to the startup. So this is also crucial for us. Can we help the startup scale?
Taylor?
Yeah, on the markets side, I think I've got a slightly different perspective because we know that ultra secure communications could be a phenomenally important technology. We know that things like navigating in GPS denied environments, as heard earlier this morning from the CTO of Northrop Grumman, not just for defense purposes, but also for autonomous vehicles that are operating within the urban canyons of large cities. Even if it's kind of a redundant system on board an autonomous vehicle, these are significant pieces of technology that really could push different industries forward. And so when I personally look at different quantum technologies, it's hard to see a ton of market risk if what they are building is going to solve a problem that we know that exists today that is solved with classical technologies, but could be further enhanced by quantum technologies. Where we see added risk is really on the people side. Again, as I mentioned earlier, there's not that many quantum professionals in the world. There are a lot of quantum companies and startups and government entities that are all vying for this talent, and it's hard to attract the talent. It's hard to maintain the talent, especially when you have really large companies that are offering pretty phenomenal compensation packages to try to poach these professionals. So, one of the things that we like to understand is, what does your hiring pipeline look like, and how do you plan to kind of maintain that talent that you do hire, because it is tough out there. So that is one of the huge risks outside of obviously building very challenging quantum technologies. Yeah.
Nardo?
Yeah, I think for me, just like mirroring everyone's saying here, I look at team construction really carefully, because you could say, I have this team and they're all like the same kind of people, but they're missing a whole bunch of different ones, right? So you need to see how they're complementary to each other. So one thing I look at. The other thing I look at is the alignment of what their skills and experience and science are compared to what they're actually building, right? So if you look at a startup company and said, oh, I'm building a photonics quantum computer, but their background is telecommunications, right? Or AI for this, it doesn't really fit, right? So there's going to be quite a bit of team building. The other thing too, just because you met a startup doesn't mean that you invest in them quickly. What you want to do is basically monitor how they're executing. I'm also looking for signs of execution in these companies, and the reason why we keep tabs with them is to basically see what they have been doing, what the progress they've made, the traction that they've made, some of the failures, and sometimes I like seeing failures because that means that they're learning, right? So and they hopefully not make the same mistake, and maybe sometimes can pivot and avoid some costly things. I take a look at that really, really carefully. And then, of course, the validation of the science. I look at all the publications, we look at all the papers, we look at the technology. and basically say, okay, is this actually true, or is this a little bit of a fluffy thing, right? So those are really team, alignment, execution, and validation of the technology.
Can I add something? Because now we're only looking at one side, at the startup side, right? But we did not look at the other side, the potential customer side, or the market, actually, because the market we also have to develop in parallel to the technology. So for us, it's also important to engage with the potential corporate partners, to engage with the industry, to find bold industry partners that dare to do quantum use cases, to spend money on having a quantum use case. And this is also a very crucial part. So the startup can be, however, so good, very good, right? But if there is no customer, and some of them, they don't have a customer, so we have to find customers for them. And this, I think, we also have to keep in mind to engage with the industry directly, not only with the team and with the technology, but also bring them outside on the market.
And that's something that, Taylor, when we had a discussion before, you mentioned that you would generally try to start with, a company or person that has identified a very large problem potential. You want to discuss your view around that, which kind of relates to what Alexandra was saying.
Yeah, it is a little bit of what I mentioned previously with respect to the existing technologies that work for communication, that work for positioning and navigation. They function. They have significant downfalls in certain areas, in certain applications. They are susceptible to jamming or spoofing. And so when thinking about the kind of, I guess, VC fund life cycle and knowing that we have to operate within 10, 12, 15 years, understanding where those real world problems are and what is kind of approachable within that timeline is going to be important for us. Now, if you come to us and say, fully fault tolerant quantum computing will be, within the next 12 years, which is, within that upper bound of the fund lifetime, we say, that's true, but that's assuming that everything goes right and that there are no delays and that things cost as much as they say that they're going to cost, which isn't always, I would even venture to say rarely, the case. And so understanding kind of who specifically the customers are, what those specific use cases are that you are kind of very focused in going after to demonstrate that market value, which can kind of help you land and expand into other use cases, is something that is important for us. And a lot of these people or a lot of these companies are going after the kind of biggest holy grail of quantum computing, but there's significant resources in that space, and there are companies like IBM and IonQ and others that are quite far ahead in terms of both resources and technological development. So finding those other more niche areas that still have nice applications to push the industry forward are important.
So you talk about the large-scale industry, and there's certain supply chain things. So if you want to get to a quantum world, then there are certain things that would have to happen. Like one, in terms of like the industry preparation, there's some discussion about that starting next year, there's some changes in quantum encryption and those kind of things. So are those kinds of like, even as we get on the path to something, then there's these large opportunities for companies to lay the foundations for something, and that's something that a startup would be able to address. Eric, did you want to have any comment around where you see the industry developing?
Yeah, I think there's a lot of, you raised probably one of the most interesting ones is kind of the NIST's release next year and deprecation following of other, I think, and if I understand where you're trying to go with the question, I think there are a lot of these external factors that are impacting these industries, right? A lot of geopolitical factors that are impacting these industries that are going to drive a lot of efforts here that I think are important for the companies to consider, and actually a good opportunity for investors working correctly with their their companies to take advantage of.
If you want, we can go through some any kind of closing remarks that you want to have. If you didn't have anything, we can skip over to Q&A. So we can start with Nardo. If you have any kind of like general views on, where the industry is, other things, or venture capital.
Yeah, so a lot of people seem to think that creating a quantum startup it's a scary thing. Don't be afraid of it. I think we need more of it, right? So it's just another kind of science and technology that we need to bring out there, right? So proving out these use cases, remember the journey of the PC, remember the journey of biotechnology, remember the journey of AI, it's all the same, right? So we may have some nuances within quantum and what we're doing here, but all of these required scientists, all of these required deep thinkers, all of these required people in operations and business. So I don't think we need to be afraid just because there's the word quantum that hey, this is only for quantum scientists to start. You can have a deep tech entrepreneur and start building a team around that and basically come up with a quantum startup. So don't be afraid to start one.
I think that's well said. I think it's an exciting time. I think there's a lot of opportunity here. I think there's a lot of fun that's going to be had along the way as breakthroughs happen, and each year we come here or any of these conferences and hear about them. So I think it's an interesting time to be investing too, and hopefully, it was said that kind of one key thing, investor is making sure that they can help you. It's not just money, but they can help you fill in address some of these risks, and I think it's a great time to be starting companies and investing companies in this area.
Yeah, I'm always a big prayer for ecosystems. So I really want to shout out to ecosystems again. So we need so many players to develop quantum technology. It's from the quantum physicist until the people, the person working in maybe a social or ethical questions. And I think we need to be not afraid of developing quantum together, and also not to feel that we are in a competition. It's much too early to be in a competition. I think we first have to develop the technology, and then afterwards we can talk about sharing the shares, what we developed. But we are still a bit ahead of it, behind it. Yeah.
Yeah, I guess, because this is a VC panel, if there's, I guess this comment's more for anybody who has their own startup in the audience or is thinking about it. I would just say be focused and be specific with the problem that you're solving, and have a clear understanding of which customers you want to go after. I think that there are a lot of quantum startups, and this is kind of a trend throughout deep tech, is that we see these kind of brilliant scientists and engineers that have created this incredible technological brick, but it's not necessarily something to build a company around. It often comes out as something that's kind of a solution that's looking for a problem. And I think that this is an important element to really make sure that you've identified the problem that you're going after, not just, hey, this is a really interesting X that can do cool things. It's here is the specific problem. Here's the specific customer profile that we want to go after, so that we can understand a little bit better, should you succeed in making this commercially viable product, that there will actually be the market there. Because when we look at things, it's okay to have technology risk. It's okay to have market risk. It's hard to have a lot of both. And I think in deep tech investing, and when looking at quantum, the technology risk is there, and it's clear. And so we want to know that if you can build it successfully, that the market will be kind of ready and waiting to accept it.
Okay, great. So let's open up the audience and have any questions they have.
All right. What is your own personal #1 challenge as you look at investing, cultivating, etc.?
Yeah, I could talk about mine. So sometimes, you have existing companies, let's say in cybersecurity or in blockchain, right? And then they will say, we're layering in a quantum technology in there, and then all of a sudden they're a quantum company. So now I have to determine, are they really a quantum company, or is this just a layer that they're putting on there? So I have to determine what separates a quantum company versus just another tech company that, another tech company that's already in there that layered something in, right? So that's one challenge. The other challenge is, looking at it from, like what Alexandra was talking about, ecosystem perspective. If you take a look at the quantum tech stack, not all of the stuff that's being built in there are going to be billion-dollar companies, right? So we have this significant gap within the ecosystem is how do we fund these kind of like, I would call them lifestyle type companies, right? So for example, somebody is creating an attenuator, right? So you look at that and say, okay, that's a very, that's a good piece of component that needs to be part of the quantum supply chain, but who's going to invest in that kind of a company, right? Probably not a VC perspective, but somebody else needs to. So we have those billion-dollar companies that we're thinking could be investable, but what about the rest? So that represents quite a bit of a challenge for me as well.
Is that a deal flow issue, or is that because the folks you invest in aren't quite, they're themselves pivoting?
Yeah, it's not a deal flow issue. The issue on the supply chain is because it's a dependency. Right, so in order for my companies to basically be, for example, if you're building a quantum computer, unless you build the entire thing from the very beginning, or you have to figure out, okay, where's your supply chain for other components? So if no one's building those other components that are not billion-dollar companies, where are they going to get it? So it's an issue, it's a de-risking issue for my portfolio companies.
Well, for me personally, it's also just tracking the ecosystem. We focus on a number of technologies, and when you get into these different areas that are technically complex, there are many different approaches to quantum computing. There are a lot of different approaches to every single technology brick that need to function in order for us to get to that eventual end state of a fully fault-tolerant quantum computer. So tracking not just the technological elements, but the regulatory environment as well. What are the governments across the world doing? How excited are they about it? How much are they offering non-dilutive funding for these different elements? So it's a lot of that, and then you have new technologies coming in like Gen AI, and we heard an interesting presentation earlier today on how Gen AI and quantum computing may be able to have a bit of a tennis match in terms of benefiting each other. Maybe at first it's going to be AI for quantum, and you can use AI to help design better systems or improve functionality in existing hardware. And eventually maybe we'll get to a point where you can have quantum for AI, and you can have these capabilities built on top of quantum computers. So these other elements that kind of come out of left field, and all of a sudden it's a huge conversation piece. It kind of forces us to step back and say, okay, well, we think we have a thesis here in quantum technologies, but what do these other external factors do to the investment landscape, due to the technology landscape? So tracking these elements, not just across quantum technologies, but the other areas that we invest in is one of my biggest challenges.
How interesting would it be to you as the VCs to sort of track and potentially invest in a company that's bootstrapped itself and gotten to a prototype stage or something to kind of minimize your risk and hopefully keep more of the share of the company in our pocket?
No, it's very interesting. I mean, that's, and I think it's a great way in many of these technology companies to approach the problem. In our portfolio, we've invested in several companies that went the SBIR route. A professor and a postdoc who spun out a company and got it to a pretty interesting place. In my past, we bootstrapped 2 companies before we took any external investment. And I think it's a great way to start, especially with very difficult technology. It allows you to get a little bit more footing, a little bit more view of your customers too, and customers' needs, because you can start that interaction a little bit deeper. So I'm if the company succeeds and there's more shares for the founder, as long as the company's succeeding, I think it's great.
I see one challenge with bootstrap companies, that is that they often have two products. One product with which they make money, and another product they actually want to develop. And so the challenge is to find the right time when to change when to change your focus. This is what we also see quite often.
Yeah, thank you all very much. Over here, guys, sorry. This is a little bit more of a philosophical question, but I don't think it's out of the realm of possibility someday quantum computers could be used by VCs to decide on VC investments. So, with that, how would you judge a quantum computing company if their own result is going to determine whether or not they receive capital? Like we've been saying, kind of hard to verify with such a limited talent pool, but food for thought.
Well, it's already happening in the AI space. We already have VCs that are already AI capable, right? So, and just like VC, just like any industry, it's an industry. And the industry is about making money too, right? So, we're using all the different tools out there. But one thing that AI cannot do is look a person in the face, right? So look a person in the face and actually determine the people that are actually building the company. Right, so that's a very thing. Even a quantum computer can't do that, right? So I think a big part of what we do is why we meet a lot of people is we basically take a look at the people itself building, right? So the people is the biggest asset that we have, and so I think that's part of the differentiation. You may have the same score. You may look at it from a scoring standpoint based on data, but data is only one piece. And that's why, me at least personally, I try to meet those companies that before I invest in any of these companies.
Yeah, I'll just say that if one day we do have a quantum computer that way outperforms every VC out there, hopefully we've invested in it, and then we can kind of sit and watch things unfold, and that would be great.
Thank you so much for your valuable insights. My question is regarding the end state of where quantum computer will be in the future. As you know, there are many different technological pathways for to build a quantum computer, and some of them are fundamentally different. For example, matter-based versus photonic-based. So I just want to get your view. Do you think, in the end, is it going to be a winner-take-all? Is it going to have multiple pathways, or do you think it just be a select few? And how would that factor into your investment thesis in this sector? Thank you.
For me, I mean, if you're talking about quantum computing specifically, it's difficult to see a market that is as big as compute be a winner-take-all market. You may have significant technical advantage in the short term. We also know that the different technological approaches have various advantages. So yeah, for me, it's difficult to see that as there will be one winner at the end of the day. From a regulatory perspective, it's probably not going to be allowed. But yeah, I mean, the market is so big and the applications are quite endless. So I'm not too worried about kind of it ending in monopoly.
No, what you also hear in the industry is not that one winner will take it all, that you have maybe different technologies for different use cases also. But then also from the VC point of view, it depends a bit on your fund or on what is your investment thesis. So if you have a smaller fund, then it might not be very good to invest only in one hardware solution. So that all influences a bit the decision. But in the end, I think there will be applications for the technologies that are developed. Maybe we don't know today what it will be. I'm sure we don't know yet. But this is what I also often hear, because I also ask this question, right?
Yeah, I don't think it's going to be a winner-take-all. I think we don't even know where else quantum really applies, right? So I think we're in the very beginning of that journey. For example, quantum biology is an area of interest of mine, right? And then I look at those applications. Somebody's creating synthetic photosynthesis. Okay, so I said, okay, that's interesting, right? How are you going to do something like that? We have so many use cases that I feel like it's still early on to tell in terms of, definitely not one winner. There's going to be a lot of winners in this space. I think I would say we're probably scratching the surface from a use case standpoint, so the number of applications. The only thing that we can imagine right now is existing use cases. Oh, anything that has an AI, let's put a quantum spin in that, right? So that's what we can imagine right now. But I think this would open up a whole bunch of stuff. I think we're still limited in the imagination as to how we can use this technology.
Got a question. So earlier in this room, we heard from the quantum computing report about whether there was a quantum winter. And his conclusion was that there wasn't a quantum winter, but there's been a pullback in VC funding in general. Would you agree with that? Have you all seen that? Is it coming back? Why might that have happened, or did it happen?
I think certainly there's been a pullback in VC funding this year. I think, it may actually continue for a little bit. I think we also see at the higher end, the later rounds, certainly a contraction in valuations, which kind of impacts a lot of that too. At the very early stages, I don't think we've seen that as much. Valuations can't contract as much. We certainly see a lot of deal flow, a lot of interesting things, and we see a lot of, we're actively investing. We see a lot of co-investors still actively investing. So I think in general, I would agree with the premise that quantum itself didn't have especially large downturn relative to the general downturn we saw in a lot of tech.
I think that there was a slowdown just across the VC ecosystem modestly this year. As far as the quantum startup funding, we're also early stage investors, and I think we saw it a little bit. I think for I don't want to speak for you all, but I hope that you still have conviction in quantum technologies even despite the slowdown. I know that we still do, and so I think that for the VCs out there that maintain that conviction and that are continuing to look for opportunities in this space, it doesn't matter as much what the rest of the funding entities or the private capital funding entities are doing. Where it does come into question a little bit is with the later stage firms, because a lot of times these businesses are pretty capital intensive, and as early stage investors, we can only go so far in the funding lifetime of a company. And so if the downstream markets are closed, then it becomes difficult. But these markets kind of go through peaks and valleys, and so despite the kind of later markets being at a bit of a valley right now, that impacts the companies right now that are at that stage. It doesn't necessarily impact the early stage companies that in 4, 5, 6 years will be there. And we don't really know what's going to happen with markets over the course of that time horizon. So we just kind of keep our heads down, continue to learn about the industry, continue to learn about what the opportunities are, and invest, hoping that, but when the time comes, when that company has hit a growth stage, that the markets will be there.
Do you think part of that the later stage VC pullback is that mostly SoftBank or other ones, or any guesses or thoughts? I know the Vision Fund has got much smaller. Any thoughts would be interesting.
Well, more capital at a later stage is nice, and that's going to be pretty correlated to how the public markets are doing. I don't know that I have a great answer for that. I'm happy to pass the mic if somebody's got some more in-depth insights there.
Yeah, I think for larger VCs, well, at least for growth stage companies, quantum companies that I'm talking to, they're changing their strategies, right? So instead of going for like the full raise, they're basically chopping out their raise and looking at more of a bridge round first. Because they're trying to kind of wait out this little lull. I do see a little lull of investment for growth stage companies. So they're changing their funding strategy. But early stage, definitely not as impacted in terms of number of companies that I do see. I think almost every day I get to see like a new company that I don't even recognize. I recently got a list, and out of that list of about close to 86 companies, there were probably a dozen in there that I haven't seen before, haven't heard before. So there are, you know, just because they're not being talked about doesn't mean that they're not there. But from a growth stage standpoint, there's definitely a lot of focus, you know, for larger VCs to go into the generative AI space. I think we were impacted by that from a growth stage standpoint.
Yeah, just to close out the thought on the late stage, I would say that it's probably most likely the biggest impact would be just the closing of the public markets, and that just kind of trickles down. I would argue that that capital is still out there. It's just not being deployed since that, or deployed as quickly because that exit option is really not there, and that horizon is kind of unclear to some of those investors.
I think we have time.
I don't have any more time.
Okay, so I think our time is up. So I think thank you for all the panelists.